Good afternoon. It's December 23rd, 2023, and it's the Wall Street Weekly Wrap-Up with your host, John Newquist. And we had another up week. Can you believe it? Start out with one of the big ones. Apple had a couple big stories. The Chinese, again, are telling, don't bring the iPhone. They might as well just tell people don't buy the iPhone, which is odd because, they like it there. But they're having a lot of policy problems. Also, the Apple Watch, following the International Trade Commission ruling, not going to be able to be sold in the stores. So it'll come back. But, the stock, if you look at it, it's been pretty good. Pretty solid for Apple over the last few months. It's broken out of a downtrend. Remember, 4 quarters in a row with no revenue doesn't matter for stockholders. It's number one in the market cap, number one in the Magnificent Seven. We don't own it because of the revenue issue, but it's had a good year. Nike came out with earnings that disappointed people. I always look at it. You make profit, but look at the revenue growth is really low. And that's what people didn't want to hear about this time. So we figured when it dropped, it's a big gap down over here. That's a big drop right to the 50-day moving average. Not good. So we're going to see probably more downtrend. Could get even lower. I think it's just having a problem of the shoes being so expensive and people don't want to spend $150, $180 a shoe. And that's really an issue. Indicators, again, the interest rates have gone down. Crude oil, we had the issue, obviously, with the Houthis shooting at the shipping things. You got to remember, these people can shoot these rockets from Yemen and disappear very fast. So it's very tough to deal with that issue. And so they're going around the Cape of Good Hope of Africa, and that's going to increase shipping costs probably $6 a barrel. So crude oil back into 70s. It's almost breaking out, probably will break out. Natural gas is slightly higher, again, still below it. Gold still hovering above 20,000. Bitcoin 44,000. So a lot of fear in that area. Could it get worse? Of course, it always can get worse. The NASDAQ composite 43%. Think about it, 43%. That's a monster year. Our goals beat the S&P 500, and it's 23%. We're beating that. Why? Because we've got a lot of the Magnificent Seven. The Russell coming up. Remember, this was at 0 a few months ago. 0. So we've had a 15% surge just in all the small caps coming up and everything else. And 8 straight weeks, in the green. 8 straight weeks up. Boy, that's amazing. And one of our owners, Amazon, I just decided to put in a couple things because everybody's starting to pick their best pick, and Amazon's on a lot of lists. If you look at it, it's been in an uptrend for a while, and it broke out of the bands, as I call it. So if you want to get Amazon, try to get it down over in the mid 140s because it'll come down. You got to remember, it's not going to go parabolic straight up all the time forever. It'll come down in the mid-range, and that's where you want to nibble it. Maybe it'll get down with a parallel this line, and you can get around 130 or so. But just give it some time if you want in it. We're going to stay with it. The Thursday night football is doing real well. Good ratings the last game, and the shipping is doing real well. FedEx came out, and guess who's lost the business? Amazon. Revenues have fallen. Ground is not there. We're not buying much stuff overseas, so the flights are not coming out from other areas. Pretty well stagnant on the side of delivery. I wish I could get Amazon's delivery costs. They don't break it out like that. How much did they cost to deliver all the packages, and is it up or is it down, or is it saving money with all the electric vehicles? Some of these companies, they look at, when you downgrade a stock that was a COVID darling like DOCU, they underweight basically a sell. And, it was, way down here. This is when you would have sold it. But when you sell it up here, that means they're hoping it's coming down here. I don't know if they're hoping it. But DocuSign has an issue, and it's not a bad company. But we know now that if you can get it down into 40s, maybe not such a bad deal. You know, if it's profitable, that's the issue. We want to see revenue growth and profitability. Zoom, they came up with a policy this week that I found out that you can't go in and do a Zoom meeting unless they get a Zoom app or have a Zoom account, which, when you don't know about it and, they don't tell you about it, or it's one of many emails you get, then people can't come in there and they just give up. So that's not a good thing. I mean, why not just have the meeting code and the password code, and then you can get in it? But I guess they want to be able to track these people who hack into these meetings or something. I don't know. I haven't ever had it happen, so I always read about it. But big ceiling on Zoom. If you want into it, you're not missing much. But the question is, revenue growth under 10% a year is not one of the stocks. Go get a security stock like Zscaler or Palo Alto or somebody else that's growing leaps and bounds. Again, Tesla target went raised. I was, kind of watch Kramer. Oh, that's not the one we own, but we've owned it. We've owned it since $125. Sold it, made some money, and bought it cheaper than what we sold it. And look at it, it's up at the $250. It broke out a negative channel finally. You got to remember when we sold it in August. We got good some money in here, and the thing is, then they put out all those deals with the electric charging stations. They're going into AI. They got robots. I mean, it's a lot of things happening that is positive. And the auto workers are going to get about $65 an hour. The Tesla workers are going to get 45 plus stock options. And there's a huge cost. They're making money on EVs, and everybody else is losing money. So we call it an industrial stock. Everybody wants to call it something else. I just said they make cars until they don't make cars, and we'll call it something else. Again, we're still overweight communication service, consumer discretionary is what our pick this year for 2024 is. And mortgage rates are coming down. As the interest rates have dropped, inflation has dropped. Now we're seeing Freddie Mac, who gives out a source of what the rates are. Now we're getting to the point where people can probably jump out and get out and trade their houses and go through it. You're talking a big difference between 6.5 and 7.75 for prices on your monthly payments. So that's good. So next year we're going to have a good year. We're going to beat the averages again. Next week we're just going to cover all our stocks, put them in our sectors, put the starting point, because next year at this time we're going to be able to compare how we did for each of the sectors. I'll have what we did from when we bought it and everything else. We beat easily the S&P 500, but let's take a look at each of the stocks we bought and discuss them and spend some time. Otherwise, have a Merry Christmas, Happy Holidays, and I'll see you before the New Year's. Thank you.